Hello, and a very warm welcome back to Boss Economic World. I'm your host, and today, we're diving headfirst into a story that's got more twists than a pretzel factory. The date is November 10th, 2025. And we need to talk about China. You see, for years, the world's been obsessed with China's spectacular rise. The story was simple: buildings going up, fortunes being made, a middle class exploding with cash. But what if I told you that story has a dark new chapter? What if the biggest economic story in China right now isn't about what's going up, but what's coming down? I'm talking about prices. Everything from your lunch to a new car is getting cheaper. And you might think, hey, boss. Cheaper stuff? Sign me up. I love a good bargain. And normally, I'd be right there with you. But this, my friends, is no ordinary sale. This is a fire sale. And the thing that's burning is the Chinese economy itself. Beijing's got a fancy, academic-sounding name for it: Involution. It sounds like something from a sci-fi movie, right? They describe it as a destructive cycle of intense, self-destroying competition. But let's call it what it really is. It's an economic black hole. It's a deflationary spiral. And it's, well, in the words of one young woman caught in its grip, it's twisted. Meet Yang Jifeng. She's 24. 2 years out of college and already a veteran of the gig economy graveyard. She's the perfect poster child for this whole mess, because she is both the victim and, tragically, part of the problem. Imagine this: you're young, you're ambitious, but the job market looks like a desert. So, what do? You hustle. Yang opened a cool little cocktail stall. Living the dream, right? Wrong. 3 months later, she was out of business. Wiped out. Why? Because massive food delivery platforms were offering drinks for pennies. You can't compete with practically free. So, she looks for a factory job, one that paid a respectable $980 a month just 5 years ago. The new offer? $630. A 35% pay cut. With her wallet shrinking, what does Yang do for lunch? She spends less than $1.50 hunting for deals on the very same delivery platforms that crushed her business. In her own words, "I become the kind of consumer who destroys businesses like mine." Folks, let that sink in. This isn't just a sob story, it's a perfect, terrifying loop. This is the deflationary spiral in human form. It's an economic snake eating its own tail. So, let's break it down, Boss Economic World style. What exactly is this monster called deflation? Imagine an economy is a giant marketplace. For it to be healthy, you need a nice balance between sellers and buyers. Deflation is what happens when the seller's side of the market is overflowing with stuff, but the buyer's side is a ghost town. The sellers get desperate. They slash prices. 50% off. Buy one, get one free. Please, just take it. This hurts companies' profits. When profits tank, they stop investing. They stop hiring. They start firing. This means workers have less money. And what do people with less money and a fear of losing their job do? They stop spending. They hoard every penny. This, of course, means even fewer buyers in the marketplace, which forces sellers to cut prices even more. You see the loop? Lower prices lead to lower profits, which lead to lower wages, which lead to lower spending, which leads back to even lower prices. It feeds on itself, getting stronger and deeper, pulling everything down with it. It's economic long COVID, a chronic, draining illness that saps the energy out of an entire country. And don't think for a second this is just China's problem. When the world's factories start selling everything on clearance, it exports that deflation globally. American and European companies can't compete with ultra-cheap Chinese goods, straining trade relations. Global giants who bet big on the Chinese consumer, think Apple, Starbucks, Volkswagen, suddenly find their cash cow has gone on a diet. The big guns are already sounding the alarm. The IMF is projecting China's inflation will be basically zero this year. Out of nearly 200 economies, that's the second lowest. The Bank of Korea is panicking, warning that China is about to hose down all its neighbors with a fire hose of deflation. But here's the kicker, the part that should really make you nervous. The official numbers? They might be the optimistic version. China's official consumer price index, the CPI, has been hovering around zero since early 2023. It's like a car that's run out of gas but is still technically on the road. But our friends over at Bloomberg News did something fascinating. They said, let's not just trust the government's dashboard, let's get out and check the engine ourselves. They built their own price index, tracking almost 70 everyday products and services across 36 major cities. Things you and I actually buy: food, clothes, a new phone, even a specific model of car. And their analysis showed that on-the-ground prices are falling much, much faster than the official CPI suggests. Out of 67 items they tracked, the prices on a staggering 51 of them dropped over the last 2 years. Why the difference? Well, let's just say getting clear data out of Beijing is like trying to nail Jell-O to a wall. The National Bureau of Statistics has a methodology that's about as transparent as a brick. Critical data series have a habit of disappearing when they get inconvenient. They were even asked for comment on this. Their response? Silence. They didn't even reply to a fax. A fax, people. In 2025. That tells you everything you need to know about their commitment to open communication. And if you want the really scary number, look at what's called the GDP deflator. Think of it as the CPI's big, scary older brother. It measures prices across the entire economy, including the industrial guts. That number has been falling for 10 straight quarters. A decade of quarters. That tells you this isn't a blip, it's a deep-seated rot in the industrial sector. The price of polysilicon, the key ingredient for solar panels? It's collapsed to less than a fifth of its 2022 peak. Steel rebar, the skeleton of all those ghost cities? It hit an 8-year low. China's mighty industrial machine is running full tilt, churning out more stuff than ever, but it's being forced to sell it for less and less. This isn't just about abstract numbers. This carnage is showing up on corporate balance sheets. A Bloomberg analysis of 6,000 publicly traded Chinese companies paints a horror show picture. The share of zombie firms, companies whose profits are so low they can't even afford to pay the interest on their debt, has nearly doubled in 5 years, from 19% to 34%. 1/3 of Chinese companies are now the walking dead of the corporate world, shambling along, kept alive only by cheap credit. For the first time in a decade, most companies are cutting capital and R&D spending. More than a third cut jobs last year. The deflationary spiral isn't a theory, it's happening right now. It has a face. And it's the face of China's once invincible middle class. Let me introduce you to Erica Chen. She is, or rather was, the China dream personified. A 40-year-old exec at a major internet firm in Beijing, pulling in over $333,000 a year. Her husband, a big shot at another international tech company. They had a second home for rental income. Their son was in a fancy international school. They had 3 nannies. A nanny to cook, a nanny to clean, and a nanny for the child. A domestic staff payroll of almost $50,000 a year. Then, the spiral hit. Erica's entire team was laid off as her company bled cash from brutal price wars. Then her husband lost his job. Suddenly, the high-flying lifestyle became an anchor, dragging them down. The nannies were let go. The international school was dropped. Erica, the high-powered executive, was now the cook and the cleaner. She thought she'd find a new job in a snap. Months went by. Nothing. She tried gig work, live streaming with other laid-off friends. Crickets. A few viewers wander in, then vanish, leaving her talking to an empty room for hours. Listen to what she says, people say shopping is cheaper now, from restaurants to skincare. Maybe it's true, but it's none of my business anymore. I need to cut all unnecessary spending. This is the psychological wound of deflation. It doesn't just empty your wallet, it empties your confidence. It takes your dreams of upward mobility and grinds them into dust. And she's not alone. We have Guofeng in Shanghai. She and her husband used to make over $280,000 a year, spending freely on designer shoes and luxury hotels. Then she took a break to have a child, and the world she expected to return to had vanished. Her husband, an engineer in the hyper-competitive auto industry, now lives in constant fear of pay cuts. We've cut some family trips, she says. When I book hotels now, I think about whether we should choose the cheaper one. It's better to cut some spending. When people making $250,000 a year start pinching pennies on a family vacation, you know you have a systemic crisis of confidence. And that confidence is the gasoline in the engine of a consumer economy. Right now, China's tank is on empty. In fact, Chinese households are now hoarding cash like it's the apocalypse. Their savings have ballooned to the equivalent of 110% of the entire country's GDP. That's the highest level ever recorded. People don't save that much money when they think good times are ahead. They save that much when they're terrified of the future. So, the billion-dollar question, what is Beijing doing about this? Surely, they see the fire spreading, right? Well, yes and no. They see the problem, but their diagnosis and their prescription are, let's say, unique. In July, President Xi himself talked about cracking down on excessive competition. This is like trying to solve a flood by telling the water to be less wet. It briefly got financial markets excited, but the optimism fizzled out because it doesn't solve the root cause, nobody is buying. So why not do what the US did during COVID? Just fire up the money helicopters and drop cash on households? Stimulate some demand. Here's where we get to the core of the boss economic world analysis, the political calculation. You have to understand the deep-seated ideology of the Chinese Communist Party. 1. They have a historical phobia of inflation. They remember the hyperinflation of the 1940s that helped bring them to power. They see cash handouts as welfarism, something that creates lazy, dependent citizens, the opposite of their vision. 2. They don't trust the consumer. They see consumer-led growth as fickle and chaotic. They believe in state-led, production-focused growth. 3. They are laser focused on strategic industries. Their priority isn't making sure Erica Chen can afford a nanny. Their priority is winning the tech war with the US. So, while the consumer economy starves, they are force-feeding capital into AI, semiconductors, and green energy. It's a conscious choice. They are propping up supply while the demand side is withering. It's like trying to fix a car that won't start by adding a bigger engine, when the real problem is that you have no gas and a flat tire. Logan Wright from the Rhodium Group put it perfectly: the deflationary problem is systemic. This is not something that can be easily fixed with a certain policy stimulus. And so, here we are, in late 2025. Prices are on track for a third straight year of deflation. The longer this goes on, the harder it is to escape. And this brings us to the ghost that haunts every discussion of deflation: Japan. For decades, Japan was the cautionary tale. After its own massive property and stock market bubble burst in the early 1990s, it fell into the same deflationary spiral. An entire generation grew up knowing nothing but stagnant wages and falling prices. They called it the lost decade, which then became 2 lost decades. It was considered a uniquely Japanese disease. Well, China is now showing all the same symptoms, but on a scale the world has never seen. Professor Zhu Tian at Seeds is ringing the alarm bell, saying the government needs to act now. He's calling for a $500 billion stimulus, via vouchers directly to households, to force start the engine of consumption. Because if they don't, the psychological shift becomes permanent. If prices fall for 3 years straight, people will stop expecting them to ever rise again. And that expectation becomes a self-fulfilling prophecy. As Professor Zhu grimly states, and that's when China becomes Japan. Let's be clear about what that means. It means the end of the dream of surpassing the US economy. It means the hollowing out of a middle class that was supposed to be the engine of 21st century global growth. It means years, perhaps decades, of stagnation for the world's second largest economy. So, the next time you're on Amazon or Temu and you see an electric scooter or a set of headphones for a price that seems too good to be true, pause for a second. Think about Yang Jifeng, forced to buy from the very platforms that killed her dream. Think about Erica Chen, talking to an empty livestream in the room where her nannies used to work. The price you see is low. But the true cost for China and for the world is terrifyingly high. That's the real bottom line. Thanks for tuning in to Boss Economic World. We'll see you next time.